Good morning, traders. This is Perry Wilkie with StartUpTrading.com, and it's 10 minutes till 9 a.m. Eastern Time on Wednesday, September 18th, a day that'll live on forever in the annals of the stock market, I'm sure. So, looking at back at yesterday's action, real quick, uh, we had the Russell come up and clear some older single prints from the previous contract. We had the NASDAQ actually do a split right on uh, the a previous split, which is very ironic to me. That these contracts have nothing to do with each other, but people remember price, right? So you have a clear distribution, and we'll get into more of that for the ES. Actually, for everyone except for the Russell, had just a picture perfect split double distribution. The morning on the upside, afternoon on the downside, both of them just consolidating, going nowhere. Just many balance areas inside of these split distributions. I said in equity profiles yesterday when I was doing the wrap up. This is a textbook picture perfect. You couldn't ask for anything better if you want to see what a double distribution looks like. That was it in a nutshell. So looking at really what that did to structure, right? We have that split basically on the Nasdaq and on the ES. You could draw a line right around 42,000 and probably uh, 85 or something like that, 87, wherever you want to draw it, and have a split there, just a single line for the most part for the Dow, right? It definitely has that. But what I want you to, and you can mark this on your chart itself. You had this large wick come down on the Nasdaq. That's what textbook, makes that split, marked there for the single prints. But if you look at where these candle bodies are, and even what price ranges traded, you can see that right around 19,700 and let's just call it 45 is the bottom of this upper distribution. The top of this lower distribution is basically right at that. Could even be a little bit lower, maybe 10 points under this bottom the box, so we could call it 19,690, and that's what we would be looking at. So I'm going to go ahead and mark this before I send out my charts for the day. Keeping in mind that between here is kind of no man's land from yesterday's auction. Of course, yesterday is the most relative uh, price action we have, and you can do the same for the ES. I'll probably I'm gonna add some marks on here before I go back, but basically what you're looking at just for yesterday and what we could see in the morning, and the title of my video is FOMC with a VIX expiration, and then before and after 2 o'clock. So before the Fed, right, we could get into, which one of these distributions do we want to trade in. We could go somewhere outside of it, lower potentially. Um, but more than uh, my thought yesterday into the close, and I think Jack was looking for a little bit of up price over the overnight as well, was that we're going to get into this upper distribution on both of these and potentially idle for the majority of the morning. We'll just have to see if that is indeed the case. Keep in mind that there is some small overhead supply right up here, and that the first test we get up there, people could be so freaked out about what's going on today that they didn't get out of their positions yesterday that they, it just starts selling in a VIX spike. Who knows? Volatility should be greater. Let's get into the tape here and what's news events today. So I didn't look at the 8:30 prints. It doesn't really matter. It didn't do anything to the tape. We've got the VIX expiration at 9, and this marks the beginning of volatility expansion potentially for the week, right? There's and we know we're going to have more than likely a very large range this afternoon. I've said it all week. I'm not trading between 2 and 4 today. I'll pass on it. I think it'll be easier to trade tomorrow and overnight tonight. Uh, And then I won't be trading Friday either because I haven't done well on the last major expirations. I've been getting whipped up. So I'm going to pass on both of those. So I'm going to trade until 2 today at the latest, and then trade all day tomorrow. And then I won't be trading Friday either at this point in time. That's my, you know, uh, trading is hard enough. Yeah, I don't need to make it harder. So then, if you do trade today, do it with limited risk and brackets, and you've got to at least be using, in my opinion, uh, 3.5 to 5 to 1. For every dollar you risk, you should be trying to get 3.5 to $5 at minimum, or you shouldn't be trading this afternoon. So looking at the FO, today, as far as positioning, there's a little bit of a outsized position right at 480 on the Qs. Currently, the Qs are trading 474.40, so this would be about 230 points up from where we are right now. 474.51, I'm sorry. So that would be, like I said, around 240 points up higher than we are right now. So the or trade 19,720. So that'd be around 960 is where this marker is for 480. And then we'll just have to see if it comes into play today. That should be first test resistance more than likely if we do happen to get up there. And you can see for the week, just the major strikes, the 480, the 475, the 470. You can see 485 is a little bit of an outlier going into there too. And then on the downside for today, 470 is that 200 points down, probably like 185 right now or something like that. Down below where we are, and then you can see it really expands. You can just get a slide if you go under 470. If the VIX is rising, you could get a pretty rapid flush and a negative feedback loop. So this 470 is going to be your flip line more than likely this afternoon. And just as 480 would be to the upside. And my guess is there's a high probability if you do get above there, it would be short-lived and you're going to come back towards 480 into the close. Looking at the others, there's really not too much that stands out. For any positioning today. So looking at where we are right now, we had basically 2 days right at just under 5,700 on the futures that were the points of control. So that 5,700 is going to be your marker once again. And then, keep in mind you got 100 points down is on the table pretty quickly potentially. And then you can see, we'll get on the continuous contracts, and not the continuous, but the exact contracts. So you can see that you've got a lid, and the only thing I've marked so far are these lines. I went back and marked Friday's bell to bell range. That's what I've been watching so far right now. And you can see yesterday the ES wicked up above, had a little sweep stop above all these highs that were from basically, August 19th up to September 3rd. Took, cleared a couple of the short stops and then really didn't come back down, substantially, and still holding above Friday. So it's holding at the upper end of the range where the NASDAQ just can't still get over. So you would have to think that if the NASDAQ gets up right around where that spot is, I was talking about that 19,960, that would be the sweep stop. So those are probably short calls that a large, institution has that they sold at, thinking it's going to be a safe position. So those are probably not long calls. Those are probably short calls that are up there because of where it is on the charts. Overnight action, 13.25 points. We've just been sitting here idling as we await on bated breath for this afternoon. I'm guessing we'll get some movement this morning. Keep in mind the VIX is expiring as I'm talking right now, and then the front month is gone. You couldn't trade options on it after last night at 4:15 p.m. anyways. So, all the options in the new contract are, being out, and the old contract is being settled as we speak, cash settled there. So as we, look, I think I beat up, this double distribution in the ES. I'll mark those out before I send out the charts and equity profiles. Go from there. Keep it simple. I mean, we either, we got the upper distribution, the lower distribution. We got, above that, uh, likely would not be sustainable before the Fed, and below that, uh, the VIX would have to be, ramping up. And to be honest with you, I've seen this movie before. Even if we flush down uh, this morning for whatever reason, uh, traders are assholes and they will sell volatility all the way up until 2 o'clock, and then they will just step on it. So if any pullback before 2 o'clock should be buyable. If you're just gonna take a little scalp, it should have reversion to the mean back to the open. Uh, Going into 2 o'clock. So I'd say until about 1:35. That's usually what's on tap, and then from 1:35 to 2, you're just going to get people clearing the boards and thinning their books and adding hedges and whatever in that last 25 minutes. So I hope this helps. Trade safe today. You should be cutting, even though volatility looks so small, it's suckering you in, right? Um, the the shotgun went off, or the starting pistol, however you want to say it, went off at 9 o'clock just a minute ago. That volatility is going to expand between now and Friday's close. When it starts expanding, is anyone's guess, but you should assume going forward now that you should probably cut your size by at least 33%, if not 60%. I would say you should cut it 33% before 2 o'clock. You should probably cut it by 80% from 2 o'clock to 4 o'clock if you trade today, and then tomorrow you should probably only be running about 40% of what you normally do into the rest of the week. I hope this helps. You guys have a great day, and we'll talk to you tomorrow.